Hello everybody, my name is Martin, this is Millionaire Autobahn. So today we're talking a little bit about the overall stock and crypto market. Just to make sure, this is no financial advice, that's just me, a YouTuber, telling the story about what I'm doing when it comes to day trading. And I just want to let you know what's happening right now in the market and what I think is going to happen, and maybe to give you a little bit of an idea so you can do your own research and get the information you need. Okay, so we all have seen the crypto market kind of collapse over the last 4 to 6 weeks. Bitcoin was at some point at about $125,000 a coin. Right now it's around $86,000 a coin. So that's in the 30% range, how much it actually dropped, which is quite substantial in any market, right? Stock market or crypto market. And so with that, we as day traders actually kind of like these type of things going on, because we can go short, or we can use short ETFs that go up when markets go down. So this is actually not too bad news in general for day traders. One other very, very important aspect of this is, and please keep that in mind, when you day trade, by the end of the day, your positions are sold and the cash in your account, even if you lost some money, the cash in your account is yours. It's not going away. The reason I'm saying is I have to show you a little bit of numbers out there that's kind of, I would say, concerning in general. So let's just go into it a little bit deeper to actually see what the current stock market is doing. So when I go actually here, this is just regular Bitcoin I'm showing you here. So you can see over the last month that it went down, as I said, about 22%. Over when it was at the highest point, it's more like 30%, right? So if we go actually back and go to Ethereum, for example, Ethereum is actually even worse. So Ethereum is currently, from a month ago, close to about 30%. But if we actually look a little bit further back, it was on October 7th, it was close to $5,000. So it actually is even worse than it's now. That's nearly 50%. What Ethereum went down, or let's say 45%, right? So it's quite substantial, okay? So, but this is the crypto market, and you know, most people can say, who cares about the crypto market? And that is true. But I actually see the crypto market a little bit of a view into the future. So when people are getting nervous about things, investors are getting nervous about things, they kind of first go out of assets that kind of seem to be the most problematic, the most insecure assets, right? So, and crypto is definitely one of those. However, for a day trader, again, it doesn't really matter. So if you actually trade something like, let's say, Bitmine or Strategy, and they go down, you just go short on that day, and you make your profit, you go out and you're fine. So no harm done, right? However, if we actually look a little bit further out, so we all know Warren Buffett, right? Warren Buffett is like the absolute star investor on this planet. He actually came, if you will, from nothing to build like a hundreds of billions of dollar company with money that is just absolutely wild. So there's something that's called the Warren Buffett indicator, right? So that indicator actually shows the stock market ratio to the gross domestic product, GDP. So, okay, what does that mean? So in general, the overall economy grows, let's say, between 2 and 5% a year, okay? So gross domestic product grows by that number, 2 to 5%. 2% is on the lower end, 5% is on the higher end. So if now the stock market is, in this case, as we see it right there, at this point, we are looking at 216%. I think currently it's 216% overvalued, meaning the stock market is 216% higher than the GDP. That would mean it would take, if we take a 3% growth per year, it would take about 80 years or so till we actually reach that number, which is absolutely impossible, because usually the stock market only looks forward, let's say, for the next couple of years, the next few years, maybe 1 to 5 years, right? But not 80 years. So this is totally out of control currently. And with that, it could be that there is a huge market crash coming at some point. And we see in this indicator how it actually kind of started to go up higher and higher over the last 10 years and just kind of, made its way up there. And here we also see when the last highs actually were in 2000 when we had the crash. And then here in 2007 when we had the crash. There was always kind of a high at that point, right? So, and then here obviously this was COVID, but that was like, not really a regular event. That was kind of, not really an event that had anything to do with GDP or the stock market. It just showed, okay, it went down, but not a crash in a sense that the market was problematic, right? But currently we're actually at a point where we say this makes no longer any sense anymore whatsoever. Because always remember, the stock market more or less represents the GDP, because the GDP is the asset of the stock market, right? So how can the stock market be over 200% higher than the underlying asset? Makes no sense. There are people out there that say, well, we're in a different time now, it's all, you cannot compare it to the past and whatever. But at the end, I don't think that is the case. I'm sure it shifted here and there, but in general, it's not the case. At the end, it's still important how big is the ratio, how much revenue does a company make, how much profit does a company make, and so on. So that is still always valid and always will be. Another metric there, which is very interesting, is actually the cash holdings of Berkshire Hathaway. So Berkshire Hathaway right now has a cash holdings of close to $350 billion. Just keep that in your mind. $350 billion in cash. That's just absolutely mind-boggling. I personally see a warehouse full of $100 bills or something like that. Dagobert Duck in his huge vault, bathing in money. That's kind of what I see there, right? So nevertheless, in this case, when we look at this, he kind of started somewhat in mid-2022 to actually kind of getting out of assets in the stock market, because the main reason Berkshire Hathaway, with that Warren Buffett thing, the market is too overvalued and there could be a potential big crash coming. And of course, once a crash is coming, it's kind of impossible to get out. Because everybody wants to get out, so the asset goes down and down fast, and you want to sell at, let's say, some stock at like $22, and once you hit that sell button, it's already $21, and you're not able to get there to sell it. So it's kind of that is a run downwards, which is very, very hard to contain. So Berkshire Hathaway is, playing it safe, as what they always do. They play it very safe and say, okay, let's just slowly go out of everything and just see where things are going till the market has, found its, let's say, its bottom again, its normal value, and then I'm sure they go back in. But currently, I think they're actually just looking to see what is going to happen with the market over the next, maybe it's just a month, maybe it's a year, maybe it's even 2 years. We actually have no idea how long it will take till there might be a market crash coming. Again, that's my personal view. That is not any financial advice. There might be not a crash at all. The market might be 20% up over the next year. We do not know. This is always the case with the stock market. We do not know. The economy might do very good. The sales over Christmas time might be staggering, and everybody is shopping, and the overall GDP is rising, and everything might be just fine. I'm just looking at the underlying data, and that looks concerning. So you got to do with these numbers whatever you want to do with it. If you say, well, maybe I should get out of my long-term positions or not, that's fine. As a day trader, again, it doesn't really matter at all where the stock market is going. You have the absolute upper hand in this case, because you only trade for that given day. And once you're out, you're out. So for you as a day trader, you're actually fine. You're actually absolutely perfectly fine. You can actually make maybe quite a lot of money when things go down. The only time when you're not able to make money is if the stock exchange has a block on short selling. So you might not be able to actually do short selling when things go down. That can happen. We do not know. But in general, this is what I see, that the market is overvalued, and we all see it, we all know it. But we kind of want to ignore it for now because, we still make some money, we're still fine. And we all say, it's not a bubble, we're good. So as said, you've got to make your own mind when it comes to all of this. I personally think I will go out of my long-term positions for now. Do the same like what Berkshire Hathaway does. Well, not in that with those amounts, but still want to keep it safe. I still go on with my day trading, which I will bring more videos in the future about. I'm still, as I said many times before, I'm still learning in that. I just had a trade the other day that kind of didn't go as planned. As always, I'm still doing my kind of same old mistakes. So I'm writing down some sort of, let's say, a little bit of a document on each step I have to do when before going into a trade, and not just have it in my head. I really have it like black and white in front of me. So I will show you how that actually looks like, and so to help not go into a trade that actually goes the other direction. That's it for today's video. I wish you a great week ahead. Please like and subscribe if you like this information, and more information will come up soon. All right, thank you. Bye.